So, by a show of hands, how many of you saw the show Hamilton? This is better than we did last year. So last year, Professor Hurley, who, by the way, is the coolest professor I know, don't let him fool you, walked up to the song, The Room Where It Happens, and he was excited about it because, obviously, this is the room where it happens in marketplace lending. And by a show of hands at the time, he asked, well, how many people have saw Hamilton, and didn't get one hand? And so we kind of fell a little flat, but because of Professor Hurley, he opened my eyes to Hamilton, and now I truly understand that this is the room where it happens. And so thank you, Professor Hurley, for an amazing introduction and for all that your work, all the work that you've done in making today happen, and more importantly, for the work that we're doing at the Online Policy Institute. So good morning, everybody. Oh, that was weak. All right, try one more time. Good morning, everybody. Still weak, but I'm not sure I'm going to get any better, so we're just going to leave it at that. So I am Phil Goldfeder, and I am newly appointed Vice President for Government Affairs at Cross River Bank, as Professor Hurley said, and I am low on time, so I'm going to speak a little quickly. I apologize, but as Professor Hurley said, I started my career working in the City Council. I spent time working at the Mayor's office under Mike Bloomberg, for Senator Schumer doing intergovernmental affairs, and for 5 years as a state legislator representing Southern Queens and Rockaway. Unfortunately, the reason why I got involved in banking policy and insurance policy is because I actually faced the devastation of Hurricane Sandy. About 85% of the people I represented were affected by Hurricane Sandy. And so this idea of financial services and access to credit and the idea of policies that needed to be changed on a state level were very near and dear to my heart. So much so that I find myself here at Cross River Bank, which is a bank, but we like to say that we're a fintech company who's trying to do the best we can to ensure regulatory compliance, but access to credit, and doing everything we can to serve our clients and our customers. And so, interesting, and if you take a look, got it. So marketplace lending, why is it that the government affairs guy is coming up to give a primer about marketplace lending? It seems kind of interesting to me, and you know, there's so many people who are much more knowledgeable. You're going to hear today panels, keynote speakers, members of Congress, experts in their field, lawyers, lenders, bankers. So why me? And the answer is very, very simple, is because we all know that the greatest politicians start as community organizers. And so today, ladies and gentlemen, we need to organize, and this is essentially our call to action. We all have a responsibility to step up and to be a part of the change that we want to see, right? And so we're going to organize, and today is a perfect example of that, and only the next step in what is going to be tremendous movement in the online lending space. So as you can see, this is only a small fraction of the areas that marketplace lendings are in, and companies that are doing the business. We all want to innovate. We all want to grow. We all want to succeed. But we have a responsibility to educate and to inform about what we're doing, about how we're doing, and about the best way to get there, to ensure compliance and to ensure that we can protect our consumers. As Professor Hurley mentioned, we know what exists today somewhat, ever-changing. We don't know what's down the line. And it's our responsibility to step in and be a part of that. And so we must take that seriously. And so let's talk for a moment, just very quickly, about the history. In September of 2015, Treasury put out what was their first inquiry. They put out an RFI to ask all of us, everybody, what is marketplace lending and how does it work? And so this was the first attempt by regulators to examine marketplace lending. And I'm proud, Cross River Bank worked with 10 platforms and submitted a proposal and submitted a response. And we highlighted, I think, things that we can all wrap our head around, right? Number one is innovation. Number two is regulatory compliance. Number three is access to credit. And most important is consumer protection. And so last year, we had our first annual policy summit because we realized that that response got a lot of, the Treasury RFI got a lot of responses, but there was very little cohesiveness amongst those of us who felt the need to work together. Right? A lot of us are in the same business, and while sometimes we compete, we do, it's important to know when it comes to government and compliance, we have to find ways that we can work together. And so we formed a group that came up with the idea of putting together a policy summit. And last year, many of you were here last year. By show of hands, how many were here last year? Oh, that's great. That's fantastic. Thank you. And so last year we had a very, very successful policy summit. I want to thank, of course, Professor Hurley, Rocket Loans for their amazing leadership in this area of finding ways to come together. It was a great event, but there's no such thing as a great event if we don't have great follow-up. And we're going to get back to that in just a moment. And so I don't have to tell everybody sitting in this room, size does matter. Oh boy, are we growing, ladies and gentlemen. Marketplace lending is exploding. In 2016, marketplace consumer lending reached $21.1 billion, up 17% from $18 billion in 2015. But with our seismic growth, of course, comes more competition, more regulation, more attention. And that's something I think we need to focus on. Of course, securitization market as an industry indicator, and if you look at the slide, to me, and I hope to you as well, you're the experts, it's saying all the right things. Upward trend since 2013, gradual increase is a sign of maturity, and because most loans aren't getting securitized, there's still so much room for growth. The market becomes stable, as we know, when liquidity is increased. And so, in the first quarter of 2017, there have been 7 securitization deals, totaling $3 billion in new issuance, the largest quarterly total that the MPL ABS market has seen, 20% increase over the fourth quarter in 2016, and 100% over the first quarter of last year. And so all the signs are pointing to a positive place. So this is great. Question is, where do banks fit in? As you can see, there we go. As you can see, there are 4 mechanisms where, 4 ways in which banks could fit in. First, and the one I'm most familiar with, is the bank as the originator. As Cross River serves, and others do as well, the platform essentially serves as the marketing arm for the bank, but the bank is originating all the loans. The bank is essentially responsible for the compliance and origination. Of course, there's the bank as an investor, as you see, bank as a partner. We saw that with JP Morgan and On Deck, and of course, there's the bank-owned platforms. And while I'm not going to get into this, I think it's important that we recognize that this system is something that was an innovation, right? It was people from outside of the financial services world that stepped in to create this mechanism, and banks are doing the best they can to work with this innovation and to ensure that we're doing it with regulatory compliance. And so, the X's and O's of Madden 2017, okay? Come on, there was a pun. Give me something. So I'll tell you this, and I was sitting down to look at these comments yesterday. Researching Madden on a football Sunday is very, very tricky. Okay, a little bit better. I'll work on it, I promise. So the question is very, very simple. Could Midland Funding charge an interest rate of 27%? That's the question. That's the question that has taken up so much space on the Lend Academy website. I've seen it. You're going to hear all about it, the details, the insights at a panel being led by Adam Goller. At 9:40, which I am already 5 minutes late for. It's going to be immediately after this. You're going to have a great panel on Madden, but let's just quickly run through it. The Second Circuit reversed the district court decision. Of course, as we all know, the Solicitor General, the OCC, informed the Supreme Court that they thought the decision was actually wrong, but the Supreme Court still denied to hear the case, which leaves the Second Circuit decision in place, but does not leave us without options. And so it is still out there. And sadly, anybody who had the chance to take a look at Brian Knight's article or piece from the Mercatus Center, which basically said we're seeing a dip in the Second Circuit in access to credit. You're seeing a significant dip in people who need that funding, those loans. You're seeing that dip because of that decision. And that decision, what it essentially has done, has created doubt in the securitization market, in the lending market, and that is bad for all of us. And so we need to do something about it. And so we turn to Congress. And we had last year, as our keynote, was Representative Patrick McHenry, who introduced the Protecting Consumers' Access to Credit Act of 2016, and now, of course, in 2017, which essentially reaffirms the longstanding legal precedent of valid when made. And I'm very excited that we have diverse members of the House, from Representative Patrick McHenry and Congressman Gregory Meeks from Queens, different parties, but coming together on a fundamental idea of consumer protection and access to credit. Things I think that are benchmarks and we all stand for. And in the Senate, we have this exact same layout. Senator Warner, Senator Peters, Toomey, Daines, Democrats, Republicans, far-right conservatives, far-left liberals coming together, for this piece of legislation to ensure that consumers are protected and there is access to credit. And so, last year, the takeaway from last year was this idea of creating OLPI, as Professor Hurley has mentioned, OLPI. I'm not sure if it's going to stick, but I like it, OLPI. OLPI was created, and a Board of Governors was created to be all-inclusive. That was the takeaway. We walked away from last year's summit and we gained so much. It was a great day. It really, really was. It was a great day. We made new friends. We heard from experts. But if you don't walk away with anything, if there's no follow-up, then it's really not worth much. And so I'm very proud to say that last year's summit led to the creation of OLPI. And OLPI is very, very exciting because the goal is very, very simple. It's to create a meaningful dialogue that is inclusive, that is thoughtful, and that fosters innovation in marketplace lending. And most importantly, it informs appropriate public policy that looks to protect consumers without stifling innovation. OLPI ensures that every interested and affected industry participant has a voice. Everyone, the banks, the platforms, the academics, the legal experts, most of which you'll hear today, all deserve a voice because they have a place in this very, very diverse industry. Each one of you. Now, I know I'm preaching to the choir because by virtue of the fact that you're sitting here, it means that you get it. You get this idea that we've got to find ways to come together, but it's not enough. When I ran for office, I can tell you that we used to say, please promise me you're going to go out and vote. Please go out and vote. But we learned that's not always enough. And so now we say, please go out and vote, but how many friends are you going to bring with you? And so the fact that you're all here is great. I want to thank you. I want to tell you that we hope that we encourage you to sort of get involved in the panels. Don't be afraid of those mic boxes. But when you go back to wherever you go back, to your law firms, to your universities, to your banks, to wherever you go back to, we want you to take this message of collaboration and working together. We think that we increase and make this tent as big as possible to ensure that we all have a voice because we all deserve a voice. And so, the next steps are really on you. Today's going to be an amazing day. It will be. I guarantee it. But if we don't follow up, if there's no takeaway, then it's all for nothing. And so I encourage every single person here, and if you're already a member, we should think about doing a bit more and getting more involved. If you're not yet a member, join OLPI. It is so important that we come together with a unified voice. And I want to thank other market associations who are here today, who recognize this idea, who have joined us today, and we're excited about what the future holds. I came on to work at Cross River Bank just recently because I am excited about the future of this industry, but we can't do it alone. We can't do it without you, and this is a call to action. I need everybody to step up and do their part. And so I want to just thank the sponsors of today, who made today possible. There were so many people working, of course, Professor Hurley and Colin Dark of Rocket Loans, and to my amazing, amazing colleagues at Cross River Bank. Like I said, today is just the tipping point. We've got to keep looking towards the future. We've got to make sure that we can control our own destinies. We didn't get where we are today because we sat around and waited for someone else to make a determination. We've got to get involved. So I encourage you to participate, to get involved, and to learn more about the Madden Midland discussion and decision at the next panel, which is going to start presumably right now, right here. So don't move. Round of applause.